Good morning, all traders, serious students of the market across the globe. This is Jeff Killian for the Vector Traders Consortium. The time is now, as a refresh, check me on this, is 8:56 a.m. New York Eastern Standard Time. This is a follow-up video which we'll entitle Part 3, Market Call Short, this morning on 9/21/2020 to reflect and continue on with the original recording that was sent out to the world here back on September 1st, that we had called a major market correction to the downside that actually turned out to happen out within a short period of time afterwards. So we have now 3 different videos. The original call, which came out again, posted on YouTube September 1st for the information ending August 31st. And then again, the second video was posted and was entitled Trading Courses for Professional Trader Training, a Market Call Short Part 2. So for those of you that are seeing this, the point is go back and start from the beginning and see how we have run down the series of events that have taken place since the original short call was made way back here on this area before the market began to sell off. Right now, we're going to start with the Dow and then move into ES. We don't have the time to go through the S&P cash side as well. So let's focus on the most recent volume that's come in here. I am we are well aware of when the options stop trading on the equity side of the market and option expiration is coming up for the quarter. There may or may not be significant volume spikes that come in, but on our end, we know very well that distribution or accumulation can be associated and hidden within those bars. And we believe at this time that's exactly what has happened. Major distribution. The indicators themselves that we're going to walk through here will confirm that as well. So on the Dow side, for the date ending, once again, right now, 9/18/2020, last Friday, we have a floor level that's established right here. Major volume has come in after the drop and the dry off here. So let's get right into the MFI and take a look at what she's saying here. We have already traded through an internal floor at this point, 3 ticks down, and the prices should follow suit. The real value of any indicator, in this case, a short-term smart money tracker, the largest institutions, is saying that prices should begin to trade down on the next session, which is going to open in somewhere in the neighborhood of a half hour right now. So this being the short-term smart money tracker that I'm following here on our end here clearly states there is the high probabilities of a second leg of a market sell-off that's going to happen today. Let's take a look at long-term money. Marginally off after the spread between the break on the floor here when the market started to trade down and the additional movement. Short-term money way down, long-term money almost net neutral for the session. Now, clearly the levels between the prices here and where they are now and the disparity between what the indicator is saying is telegraphing what we feel is going to happen out on today's session. Other than that, let's take a look at the Chaikin oscillator here, way down after the negative divergence here, and again down again. Directly related to the accumulation and distribution as pegged to the MACD, the indicator says that this is going to happen. So that being said, let's get right into the ES and take a look at what's happening on the futures side. Okay, this is S&P E-mini futures near contract month 1220 here. And this is where we have the most recent floor level established that is put into play from the up close of 9/9/2020 at 1700. Okay, here is the settlement. Here is the level at 330,450. Right now, because of the overnight session's action to the downside, the prior settlement was 331,625. The overnight low for the December near contract month, again, 2020, was 3247.25. That's a lot of points. And so that low is located right here. So this is the distance from this bar's open to where the low on the overnight session is located right here. This in and of itself, with the volume that's come in, right, associated with this area right here, saying that more than likely, as soon as the equities open, they should gap down both on the Dow and on the cash side on S&P. Look at the trend line violation here that came as the market started to trade down on the first leg. And here's your second trend line broadcasted out into the future. Same point of origin, connect point number 2 here. And there is the early warning prices traded through it. And the probe is, as you can see, from the most recent action on 9/18, the low is through the low of the bar where the floor level at 330,450 was located, again, back from 9/9/2020. This is important to really understand what's going on behind the prices, people, the mechanics of what's happening. I mean, years ago, all we ever talked about was how to find, track, and trade the smart money. If you're not a high volume trader, if you don't know how to understand what's happening and get behind the prices, major market turning points here will be something that you'll act on late. And so, again, how do we do this? Let's get right into the MFI here. Again, more down moving here, almost a mirror of what you saw on the Dow on the equity side after another negative divergence here, right, which was clearly indicated on the original video posted. Let's get into the long-term money here. Okay, again, almost net neutral after the great distance between here and here as compared to the prices. The disparity is so much greater. And last but not least, Chaikin oscillator, again, down here. So what we're talking about here is a preponderance of evidence that says the second leg of the market should happen out and roll down as soon as the equities open again at 9:30 and a nanosecond. This is what we're looking at. So how to act on this? What are my levels to the downside? Where do I need to be paying attention in order to be able to see, where we can go with all this? I believe as we go through this here, the levels that you really want to pay attention to after the floor break here, which has already taken place at 330,425, is going to be right here because of the stair step up, which creates little resistance to the downside. The only real POCs are located somewhere around this neighborhood here, and these are down moves for shakeouts. So no real volume associated with these points, which is why the prices have traded down so far in the overnight session. Copy me. Okay, targets to the downside on a closing basis would be 32.59. After that, the downside of this congestion pattern here for the levels at 31.93.50, 31.83.25, and 31.73 for now. If the market's going to trade down further than that as we go through the week, we'll record another vid, get it up so the world can see it, and we'll lay out some more prices here to the downside. So this concludes what we wanted to get across today. This is Jeff Killian for the VTC, Vector Traders Consortium, at vtctraders.com. Anybody who really is a serious student of the market can come on board with us and learn how to identify these the same way that I have today. Subscribe to us on the YouTube channel and see how the market, when the market unfolds, we're right there every step of the way.